Investors Club. I'm your host, Immer Wunderlich. Let's get right into it with VIC readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have BLACKLINE Inc. Ticker is BL. Price at the point of filing is $63.35. No, 85 cents. I'm sorry. Description. Category killer, mission critical software company with strong growth, free cash flow, and extremely high potential strategic value. GS has a misplaced, at best, sell rating on the stock that has recently depressed the shares, which I believe are heavily undervalued on a standalone basis and a possible double in a strategic sale. All characteristics of a highly attractive M&A target exist here. Mission critical, sticky, loved platform that demonstrably saves customers sustainable money, the substantial money, generates tangible ROI. Extremely high gross margin business with pricing power, high free cash flow dynamics resulting from prepayment for services, easily reduced eliminated sales, marketing, general, and admin expenses. Semi-retired founder Therese Tucker is a proven winner, holds a $4.4 million shares, $275 million dollars plus ownership stake, and already is a veteran of the private equity process via BlackLine's 2013 sale of a majority stake to Silver Lake, since realized. CEO with experience in cashing from a strategic sale to Oracle. Investor Day in November got updated projections disseminating into the public realm. Single class of stock. This morning, the company issued an 8K indicating a 95% RIF that likely will add $20 million plus to the company's run rate profitability. So I decided to go ahead and post my write up now, as I believe it's timely. Based in Woodland Hills, Los Angeles, California, BlackLine is a subscription software company whose cloud-based financial operations platform manages and automates financial close, accounts receivables, and intercom accounting processes for over 4,000 large enterprise and to mid-sized companies globally. The company is recognized as a leader by end-user review sites including Gartner, GT, and Trust Radius. BlackLine was founded by Therese Tucker in 2001 after leaving SunGard, where she served as Chief Technical Officer. Having graduated from the University of Illinois with degrees in computer science and mathematics, she built the initial BlackLine product offering and engineered its transition to the cloud in 2007. Tucker continues to serve as executive chair and owns over 4.3 million BlackLine shares worth 250 plus million. In early 2021, Tucker promoted Mark Hoffman to CEO. He had joined the company as COO in 2018 from NetSuite, where he served as president of worldwide sales and grew the company from $3 million to $1 billion in annual revenue, when in 2016 it was acquired by Oracle for over $9 billion. As an investor, I am attracted to mission critical software companies that provide cost effective services with a strong value proposition, whereby process automation saves customers substantial costs. A software company's ability to demonstrate an inarguably high ROI for customers not only facilitates the sales process but also drives high internal gross margins and substantial long term pricing power. Further, as adoption continues to grow, network effects built as key employees consider such results. In BlackLine's case, the typical cost is usually equivalent to about one employee for SMEs and somewhat higher for larger enterprises with multiple divisions and complex organizational structures. BlackLine, in my estimation, is a compelling case study in the enterprise software industry in that it is the truly indispensable platform for the office of the corporate controller who oversees accounts receivable, contracts and billings, payables, purchasing, travel and entertainment expenses, general ledger accounting, SEC reporting, and audit/tax. Controllers typically oversee large teams across departments, which have historically relied on manual processes with inefficient and fragmented information sharing via network drives, emails, and physical binders. Controllers and CFOs have dealt with limited real time data analysis, productivity inefficiencies, risks of inaccuracies, material weaknesses, cash management challenges, and overworked/low morale department employees. By automating critical functions, the BLACKLINE provides clear visibility, accuracy, and consistency in financial closings and compliance, while integrating securely with virtually all global ERP systems Oracle, NetSuite, SAP, Microsoft Dynamics, et al. Uniquely, the company's platform is truly system agnostic in that it supports files from number one, any single system, number two, multiple systems in use, and number three, third parties on customers' behalf. BlackLine's highly secure ISO 27001 platform is attractive to clients in all industries, from casinos to government defense contractors, and the company is in process of migrating customers to Google Cloud Platform. The company operates in a large, underpenetrated market that management estimates to exceed $28 billion, consisting of 18.5 billion financial close and 10 billion accounts receivable sub-markets. Of course, I discount these markets numbers heavily and am focused on the simpler point that the company has substantial headroom to take market share, particularly from status quo manual processes for many years to come. In a recessionary environment, companies of all sizes are seeking efficiency and cost savings, and independent research organizations, Nucleus Research, released a study in 2021 calculating that BlackLine's customers on Oracle's ERP system generated $2.58 for cost savings for every dollar invested. To that end, BlackLine has developed a global partner ecosystem that not only markets and sells the company's software, but also assists with implementation. Unsurprisingly, some of the largest accounting and tax firms are on this list, as BlackLine not only makes their clients' job easier, but also makes their own audit and tax work more efficient, consistent, and remote friendly. BlackLine has sustainable pricing power, yet historically, management has chosen to strike a balance between number one, maximizing pricing today, and number two, taking a longer view and growing its customer base while eliminating barriers to adoption. Attesting to management success in this regard is its simultaneous realization of both higher pricing and rising dollar based net revenue retention rates, 110% in the second quarter. In February, its CFO Mark Panton commented, "We've had a couple of record quarters of user expansion now, also coming from global rollouts within our customer base. And then all of that on a higher pricing lever. Every year, we have annual prices increases within our customer base. And we have also a very high renewal rate, particularly in the enterprise. While BlackLine had been on my radar for quite some time, I became much more interested in the stock as the company's valuation declined sharply earlier this year. After reaching an all time high of $150 per share in February 2021, the company's share price has since fallen roughly 60%. I estimate that BlackLine could end 2024 with a run rate revenue of 825 to 850 million and a gross margin of 80 to 82%. The current GCP migration has depressed GM by 3 pp, implying roughly 675 million of run rate gross profit. With its current enterprise value of approximately $4.3 billion, and based on my projections, BlackLine presently trades at roughly 6.4x year end 2024 run rate gross profit. The metrics that I believe to be most relevant to potential strategic buyers with substantial internal sales and marketing and R&D teams, management's target 21 to 23% plus operating margins is after spending an extremely high 38 to 40% of revenue on sales and marketing expense and 7 to 9% on general and administrative expense. Duplicative line items that could be largely eliminated by certain strategic buyers or sharply reduced by financial buyers. I believe this could quite easily be a 50 to 60% contribution margin business to a strategic buyer. Should Tucker decide to exit, it is my belief that strategic bidders for BlackLine could be numerous, potentially including SAP, which is a key strategic reseller partnership today. Oracle, Microsoft, Salesforce, IBM, and Workday. The company could also be attractive to financial buyers. To wit, BlackLine's Los Angeles neighbor Clear Lake Capital, a $70 billion Santa Monica based private equity firm, purchased a $4.5 million share. Purchased a 4.5 million share, 9% plus stake in the open market in the second quarter. an unusual transaction for a buyout firm that ordinarily operates in the private markets. This transaction made Clear Lake BlackLine's largest shareholder. Subsequently, during the third quarter, Clear Lake took its stake up another 296,000 shares to 5.7 million shares, just under the 10% filing threshold. Further, BlackLine is no stranger to private equity. In 2013, the company sold a majority stake to Silver Lake's middle market fund, an investment which that firm has since realized. On November 8th, BlackLine hosted an investors' day at which management indicated a clear path to a Rule of 40 company. 20 to 25% organic revenue growth, plus 21 to 23% operating margins. Given subscription prepayments, free cash flow margins would likely be 1 to 2 pp higher. Therefore, on a continuous independent basis, I believe this equity is a very attractive at current levels. BlackLine's balance sheet is strong with 2024 1.15 billion, in 2026 250 million converts, largely offset by 1.05 billion of cash and marketable securities. SBC has been running around 20 million per quarter, and I believe a large amount of this would be eliminated in a sale. This morning, BlackLine issued an 8K announcing that it was reducing its workforce by 95 people and said the planned actions are primarily in response to cost reduction initiatives as the company continues to focus on key growth priorities. The actions are expected to be substantially completed in the fourth quarter of fiscal year 2022, subject to local law and consultation requirements, which may extend the process in certain countries. Costs associated with the reductions are not expected to be material. While I don't know the precise cost savings here, I suspect it is more than 20 million annually. This could be a first step in preparing the company to maximize value in the sale event. To be clear, while BlackLine is positioned to thrive independently, this is a business that should be acquired, in my opinion. In a sale event, the company could prove to be worth a 10 to 15x recurring gross profit. Avalara, a business with some operational issues, recently sold to Vista for 13x gross profit, which could yield a $130 plus equity value per share. Catalyst, Therese Tucker is a winner. I predict it's just a matter of time until full value is realized. Thank you very much for tuning in. See you next time. Please write down in the comments below what you think of this company. This is not advice, not recommendation. Please do your own diligence before investing into